There's two things to consider with a credit bureau, and that will decide if it's good or bad. One is Beacon Score, two is your credit history. So Beacon Score, institutional lenders don't like to lend to anybody with a Beacon Score less than 600. It's not that they won't, but they rarely do it. And secondly, the other thing is the payment history. You may have a credit score that may be over 600 and maybe 650, but if your payment history is questionable, they still may not lend to you. If you have payment history that's old and also can be explained, sometimes people have things going on in their life that I went through a bad time. Okay, it's understandable, and now in the last 24 months you've had good payments. Some lenders want 12 months, but 12 to 24 months is good if you have good payment history. So they may lend, even if you're just under 600, but that's the magic. And bad credit people, most of the time, they're going to be in the, fives, low fives, maybe even in the fours. Private lending is the great source for people with bad credit. It's not that institutions, there are some lenders, there are some B trust companies and credit unions that will lend to people with bad credit, but by the time they're finished with their application, number one, the rate is probably equal to, sometimes even more than what a private lender will do. It doesn't mean because it's private that the rate's going to be astronomical. It's still a reasonable rate. And secondly, when you're dealing with an institution, you're still going to have to go through the process. So an advantage with private people is, as long as you have, they care more about what is the asset, what's the equity, how much equity do you have in that property, and they decide pretty quick whether or not they want to give you a loan. Here's my terms, here's my rate, here's what it's going to cost, and you decide quite, quickly, yes, I'm okay with that, that works for me, and then we do the deal, get it done, get it closed. Yes, they're definitely more expensive, but everything's relative. You may be paying Visa and MasterCard and things like that, and okay, let's say you can't get the best rate in town because you have bad credit, but it's higher, but it's not that much higher. It's still a great savings from what you're paying on Visa and MasterCard and some of those loans. And secondly, when you talk about payments, the rate's lower, but it's also your payments. You're paying 3% of your balance on some of these cards, whereas with a mortgage, either you're going to go on a regular amortization, equal to what somebody else is paying, and because your rate's higher, maybe it's a bit more, but it might only be $100 or $200 depending on the amount of the loan. So it's definitely an advantage that way. If you're sitting with a good first mortgage on the property, that let's say you got that when you had a good credit, as opposed to now if it's a bit bad. If you had if you have a good mortgage at a good rate, you like to hold on to it. You want to hold on to that first. So if you're behind a couple of months, right away, you want to talk to the lender. Look, if I go out, for instance, you could use a private lender to do a second mortgage. Come up with enough money, and you talk to your first mortgage. If I come up with the arrears, will you allow me to continue? So that's the thing. You would like to continue with the first mortgage if you can, because the rate is still good. It's still an A-type rate. If that can't happen, yeah, then pay the first mortgage off. If they're saying no, it's gone on too long, so we have to pay the first mortgage off, refinance, get everything put up to date, get you going again. You get your credit under control, and then down the road, we get back to a regular lender. Major thing that would cause you not to qualify would be a lack of equity. Bad combination, I'll tell you, I do get calls quite often, people that have, bad credit and they have really no equity left in their property. That's a bad combination, and it's impossible for even a private lender to help. When somebody's in that kind of a situation, they need to look to family and things like that to at least help them through the short term until they can get their credit better and apply for an A mortgage or an insured mortgage. But private lending, you need to have good equity. You need to have no judgments or executions against you. If there's a judgment, maybe even sometimes Revenue Canada might have something registered on your house that has to get paid. Those types of things, either they stop you from getting a mortgage, or those things have to be paid out at the time of the mortgage being advanced so that the mortgage can be registered properly on title. If you need more information, give me a call or send me an email. Take care.